following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Happy New Year. Good to be back. Travels are over, and we're going to try to get down to business here, see if we can help you guys ring the register all year long. And I heard it's going to snow in North Carolina this coming weekend, so something to look forward to for me. Want to go camping, get right into that cold weather. But let's just get right into the S&Ps here. This is something really interesting to focus on here. And I want to show you why. I was just adjusting something here. So as I go into the scanner and I go into my futures section and I look at the S&Ps, let me go down to right where they are. You'll see a green cell there. You'll see top of a profile 2224. This is our weekly. And as we look at some of the the S&Ps are up considerably this morning. But as we look at the profiles here, we've had a new profile appear below price action. You guys know if you watch this show, this is our long-term slant on the S&Ps, the weekly view. Profiles are edging up. You kind of see that. Even though we had some disturbances there, that was the Trump kind of fear factor, if you will. Having a new profile appear below price action is extremely bullish. Above price action is, extremely bearish. So we talked about looking at this as buying the dip, not really playing around with trying to sell resistance on the S&Ps because of all the bullish setups. We started having I'm going to my dashboard here. And hello, everybody in the den. Good to be back on a continuous basis here, finally. We had some disturbances that started happening. That was in our breadth calculation. There's a little bit of a rollover that started happening around the 27th, 28th, into the 29th. But, you have to look at these longer term inflection points. And you have to be looking at, especially, when we have a weekly profile appear below price action, you got these daily numbers to kind of look at. So on the index levels themselves on the continuous contract. So what does that all mean? So this is the daily. We talked about weighting and what's the higher probability trade to put on, all things considered, is not to really sell this area up here, 2265, even though this ended up being a great trade and we ultimately ended up diving back down into the profile. This is a stronger setup and a higher probability situation at 2236. And, we've kind of had a little bit of luck of the opening of the year here and bouncing right off there. You never knew if that was going to cave in or not. But, playing the odds and playing the probabilities, all things considered, it was a little bit better situation to try to buy support. Now, that was really a fruitful trade there from 2265 down to 2236. That's 30 S&P points. But sometimes, if you're not willing to understand that is the lower probability situation, hats off to you if you did the trade. But again, we're trying to increase the odds at all costs all the time. All right, so we got to look at oil, and I'm going to go down here. Where's my oil trade here? There it is. As we look at oil, we've obviously had some movement Sunday night and into Monday morning, or excuse me, I'm a little mixed up here. It's Tuesday. So we've had some activity overnight. Here's oil right now. We talked a little bit about this, being hesitant to try to short this, and this is the main reason. This is our weekly view. We've been kind of spinning around above profiles here, and considering some of the things I said last week, the one or two shows that I did do last week, the dollar situation should be kind of a little bit of a hindrance to oil. It's seemingly not. Oil's kind of shining also in the face of the dollar just getting on its horse this morning in a big way. We've talked about this also, not shorting the dollar. There's been zero reasons to short this. And oil rallying at the same time is a pretty big feather in the hat of oil. So as we look at this and we look at oil, and we also looked at last week a little bit, we looked at the ETF, the XLE. And if you guys have any questions or comments, feel free to throw them in the den or call in. Would love to hear from you on any type of trades that we're talking about on the air here, or anything you want us to do some instant analysis on. So it looks like this morning, I don't know if this is a real print or not, 76.63. So we're trading about up in here. Again, last week we had a new profile appear below price action on the XLE. This is kind of a really bad news for shorts that we're continuing to look at this from the long side. Oil's really giving you some help this morning. You had a pullback into kind of, again, diving into the profile and exploring the entire fair auction. That's a really, if you look at some statistics on looking at our profiles and how they're structured, a lot of times when you start diving into the balanced areas, a lot of times you'll start exploring that entire fair auction. So we've got, the buy point that happened here. It was kind of go-go on the weekly. You had the profile appear below price action there, and it's a really decent scenario to step on the gas pedal with the longs. You had some overnight risk there, playing around with that on last week, but again, you're just trying to turn the rates the same way, put the probabilities in your favor. Take a look at gold. This is an interesting setup. And the reason being is we got up into, we kind of closed up in the fair auction on the daily. We never really got into the 1169 area. Right now, I like this a lot from the long side. I like it because of what the dollar's doing also. But as we look at this February contract, I want you to kind of go back into the weekly here. We had this, again, we had a new profile attempt to appear. This actually is crossing up into this profile. This profile actually starts right there. We don't index it to show it right there because it kind of starts confusing people. And also, oh God, you painted it as if it crossed into the border. On Bloomberg, the profile actually does have a beginning point at around 1258. So as we're looking at this, we're going to talk about this a little bit more from the long side when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were talking about gold on the ending the last segment, and I went through some things on the daily, the dollar. This is our weekly profile. This is about as, I don't want to, this is not a back the truck up situation, because gold could just take another shot to the gut anytime. 1146, this profile, been in force here. Bottom of the profile is 1146. The low is 1146.5, and I really like this trade right now for some reason. The POC is kind of buried within the bottom of the profile, as you'll see that control, or the center, excuse me. I'm going to point you to the screen here. That's a massive foundation on the bottom for this. Don't get super mega happy about getting long gold. It's just a really good situation with the dollar climbing and gold just kind of staying steady. Now, this particular bar last week closing, like I was saying before, these profiles really start in this week. We don't show these, and they don't output in the scanner like we do on Bloomberg. Bloomberg wanted them to, they wanted the profiles to move around and kind of appear and disappear as they were trying to form. So what we did on other platforms and in the scanner itself was really kind of negate that, because it was just confusing people. And I thought the profile was there. Oh, now it's disappeared. Well, it's trying to form, and it's attempting to lock in. So that's what this yellow bar means. But the profile really started there. Have I beat that to death or not? So when we cross back into the balanced area, a lot of times, remember, again, this is kind of trading against the trend a little bit here, but I think you've got a trading opportunity, because a lot of times these fair auctions are just kind of explored more so when you have these reversals back into the meaty part of the bell curve, put it that way. So here's our daily. So I'm kind of ignoring this right now, and I'm still kind of looking at 1146 and below that, based on your appetite for risk, and kind of a standard 10%, 20% noise level for stops. the first target being 1169 and possibly even higher. So I think you've got a really good risk reward scenario here. This may not develop like I'm saying it might, but you got to take what's given to you. And I think you've got a really good long-term change in the tide of this thing right now. And more importantly, a place to play defense. So I like the setup. I'm not complicating it with, a ton of other indicators here. I'd love to hear maybe what Mr. Rhodes says later about gold. I'm going to listen to his show very intensely, and Basil and Larry and all the rest of them, David White and Tom, of course, to kind of get some more perspective on this type of a trade. Again, we've already kind of had a reversal, but a lot of times when you close in the profile, you'll go back and retest it and possibly look for some higher action. So this is really almost a pristine little follow the textbook type of setup here. And I think we could actually get a little bit of a bounce. We'll continue to check on it. Somebody's asking about natural gas. Let me see if there's any more questions up here in the den. Nope, a lot of football talk, I see. And okay, so let's hit natural gas. And what month are we kind of focusing on natural gas? I mean, Mr. Rhodes, Steve Rhodes in the den, the Honorable Steve Rhodes, is talking about an explanation that I gave. I mean, I like to keep things really simple, and I like to use these levels, these inflection points. I don't try to complicate it too much because it kind of clouds my mind of, really, being able to kind of just put the trade on and turn the wrench the same way that I always do. But I welcome you to listen to some fundamental perspective on this trade and also some other technical setups that might lend credence to this thing bouncing. All right, so we're looking at February natural gas. Are you sure? Let's see. Let me see here. Okay, yeah, sorry, that's my fault. I don't know why I had a different month in there. All right, so I don't trade natural gas myself. This is our long-term weekly. And, we had the profile appear below price action. This is our long-term, but I mean, I don't know if you can, there's a lot of room on that particular trade looking at it that way. The fact of the matter is you're trading above profiles on the weekly, and you've got a pullback into 3474. This is today's action, of course. You could start nibbling down here. I don't think that this is going to be a scary situation. Just put your stops in. You're kind of right at and have already pierced some inflection points that we've been kind of speaking about relative to profiles. But, you've got to pull back. I think the long-term scene on natural gas is bullish. So, taking a stab at this down here might not be a bad idea, but I don't trade natural gas. I think Larry may have some things to say about that, and I'm going to listen to his show to find out. So, bottom line is on natural gas, you've got a support area that you're kind of hovering around with, and natural gas is so crazy and herky-jerky that I would consider this still in the ballpark of support, even though we're just kind of trading below 3474. All right, silver. See, this is kind of one of those go back in the profile scenarios. This is our daily on silver, explored the whole thing, then kind of pulled back. I think gold's a much better setup than silver right now, so I'm just going to avoid even talking about silver. I think gold's probably a better bang for your buck. Let's go take a look at the 10-year. This is our continuous on the 10-year. And man, did Trump scare the mess out of GM and Ford this morning, huh? I mean, you had to know that was coming. You had to know it. I mean, he stated it plainly. He ran on that concept, and here it comes. So here's a 10-year. You know, the S&Ps are obviously going bonkers today. I think you've got some really good support here on the 10-year at 123.10 into 123.21. Now, you might say, okay, well, that's a pretty big spread there. We're going to talk about this trade a little bit more, kind of very similar and reminiscent of gold setups. So I want to take a look at this when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We're trying to get our head wrapped around the 10-year. Again, it's a very similar setup, as we talked about gold. So 123.10, this is our, again, weekly profile starting this week. We kind of had that indication last week. But remember, that profile bottom really started last week at 120. Where are we at here? Sorry. What is going on? Oh, here we go. I thought I was losing my mind. 123.10, it kind of extended over there. So we've closed back in the balance area. We're coming back and retesting that general area. And 10 years got some volatility to it right now. See, we're going to look at also what's going on over here. So I talked about a spread or a range from 123.21 down to 123.10. I'm still going to stand by that. We may kind of trail off a little bit more. It's first trading day of the year. The markets could have some follow through. Some people could wake up, of course, and they're going to miss the train again. But I like this particular trade, kind of backing up into this DMZ down here between 123.10 and 123.20 in that general area. So I'm looking at this as, again, possibly a hedge scenario. Maybe this is kind of a buy the in the money puts, kind of get a decent size into this particular trade, and or look at stops below 123.10 based on your appetite for risk. So it's kind of keeping it simple. There's not. Let me just kind of back up here. Let me look at the daily. It may not have a significant bounce here, but I think you're kind of putting in a floor on the 10-year right now. This is the first time, remember, that we've had a new profile appear since we had the last one. This is September 2016. Now you've got January 2017, and I think we could have a little bit of a exploration a little higher on the 10-year now. And I mean, these rates can go much higher. So keep your stops in. All right. Yeah, that's somebody saying how these things are holding up with the dollar strength, some of the commodities. Somebody said that in the den. That's something to think about. It's also, it's kind of that relativity situation. Let's take a look at General Motors. I know you guys have probably been listening to the tube over there. I don't think these are real prints. Maybe they are. 34.68. I don't think those are real prints. I think we're probably going to open much lower here. So General Motors, what have you got down here? You've got 32.47. Again, kind of a similar situation, diving into the balanced area, kind of harbinger of bad news for longs last or 2 weeks ago. So 32.47 down into 32.26. That's going to be, if we're opening up down there, you could get a little bit of a bounce down there, and that would be really kind of letting the market come to you on that one. Let's take a look at Ford. I don't think these are real prints here either yet. So Ford, let's see. You've got 1150 down here. This is a big support area. So that will be something to possibly play around with on Ford, picking it up on sale off of the news and the market being relatively strong. Could get a little bit of a trade and bounce there, but if this thing closes below, and that goes for GM too, if these things close below these inflection points, I think all bets are off on those two scenes. Let's take a look at Twitter. Still, just constant exit of management out of this thing. We had, this is obviously a very story-driven situation, but last 2 weeks we've had closes. This is, again, not showing today's action. We've had closes below 17.18, and that really kind of breakage of the balanced area, being outside, going back and possibly retesting last week. These are now selling opportunities in Twitter. I really don't see anything changing for this. We've kind of been talking about this from a bearish standpoint overall. Now you've got kind of a breakage of this profile situation that was scaling up, getting below. This is kind of a long-term break in Twitter. So if you're holding on to Twitter, you're definitely kind of in the okay to be short, not okay to be long scenario at this stage. Let's take a look at Apple. Those are real prints on GM and Ford. I'll take a look at that. Let's take a look at Apple. 116.17, or that, 116 pre-market. So, I'm not super bullish on Apple. I would love to see this thing dive back in below 115. I'm just kind of staying away from Apple, especially on the long side right now. Let's take a look at Coca-Cola. This is one we've really been not exactly that happy with on the long side, and pretty big rally a couple of weeks ago. This is our weekly in Coke. I really fully believe we're still going to see 40.51 on this stock. I don't think this is one to be looking at on sale. Johnson & Johnson. Let's see. I don't know why it does that. All my time frames have changed. Hold on, guys. Sorry about that. Well, all right. Johnson & Johnson, still, in my opinion, not one to be looking at from the long side. This has been, explore the fair auction, come up into inflection point sell. I think you're going to see 112 and lower on this stock. Let's take a look at Home Depot. This is 130. Let's see. We closed at 134.08. Looks like a real print here at 134.91. So again, a stock that's kind of broken out, coming down into support. You got a chance to play defense on this one. I was looking at this in the scanner. It was one of those stocks that if I go into the uptrend support, you're going to find there's Home Depot. There it is, bottom. So if you're looking for setups like this, you can go in here, look at one of these custom sorts, create your own manual sorts up here, and I'll just do that for you. Watch this. Trading above profiles, coming down into the bottom. These are stocks that are relatively bullish and coming down into maximum support. Puts it right on the radar screen. Home Depot, General Dynamics, Boeing, Netflix. We'll take a look at some more when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. I was looking at the Nikkei here in the CSI 300 on the Shanghai. Here's talked about this last week, getting down into some ripe bounce opportunities. This is what the Shanghai is doing off 3,300. Talked about this when I was actually in Shenzhen to some folks there. Magical. Let's take a look at the Nikkei. You know, again, a stock that's right in the middle of the balance area on the long term, but coming down into, this is kind of like that Home Depot trade, kind of coming down into support here, 18, or similar to the Home Depot trade, 18,992. This is the Nikkei futures, and coming up into a place where pretty much the trade's kind of over for right now. You got some resistance up there. Let's also take a look at the Hang Seng while we're talking about Asia. God, if you've ever traded these things, this is scary stuff. I think a lot of these indices will probably head higher, especially over in Asia. Let's take a look at American Express. This is another one. I think this is a real print 74. We're not printing yet this morning. So we're going to have a new profile this morning on the long term on AXP. I'm interested to see where those inflection points are, and if we've got a profile that might appear below price action. You've got decent support, 73.31. Let's take a look at the XLF. $23.55. That looks like a real print. So sitting up here, this will be a little bit of a floor for this ETF, 23.20. Let's take a look at the VIX, and let's see where we're at. There it is. All right, so talked last week a little bit about this thing getting down into this, 11, 12 area. Had a little bit of a bounce. This is our weekly view. Caught the 1463 top of the profile there, if you can see it. Not backing off too much here, but when we get down into this 12 area, you remember you've got some decent opportunities to trade this from the long side, and that also lends credence to looking at possibly some. We talked about on the S&Ps, kind of short-lived, but being able to weather some storms, buying in the money calls, shorting the S&P futures. Similar situation here for the VIX. When it gets down into this ripe area, it's a decent kind of weighted out trade. May not react violently immediately, but it's a decent setup to pay attention to when we start seeing those numbers. All right, hitting a couple of the usual suspects here. Sorry. Taking a look at the NASDAQ. So let's just call it 4,900 right now this morning. I think the trade on this one, I think you've got to kind of wait and see if you get some closes above 4,900. I don't know, we're up pretty good this morning. I don't know if you can buy this. So I think this is kind of a wait and see on the index itself. Let's take a look at Netflix. This is one that was in the scanner. Here's the weekly on Netflix. I know there's a lot of news out on this particular stock. We're coming down into bottom of the profile. This is kind of strong stock coming into shift down time frames, and the support here on Netflix. Here's a scanner. There's a couple of those picks here. Let's take a look at Yahoo. And we're actually putting a beta component into the scanner, so you can, in the very short future, let me show you a couple of things here. We're coming out with, this isn't the latest version of this, but an HTML5 version. I've been talking about this for a while, but development is always slower than I want it to be. So if you're seeing this, kind of a way to get down and drill down into, and ignore the delays here. We're still kind of messing around with this. A way to come in here, you're going to have some, on this particular product, more focus to dailies. But if I come in here and drill down into the stock, get all the information that you need and see a chart, you're not going to see it right now. But we're also putting a beta component into the scanners. So for instance, if you want to dial in a higher beta, a lower beta, and have that relativity to the market of the individual instrument, the stock itself, and be able to kind of, if the stock's breaking out above a profile, for instance, and you might want to ignore that unless it's kind of having some kind of anomaly with the market itself. So if a stock that has high beta is breaking out and the market's kind of moving north, then that breakout, it's supposed to happen. But if you've got a breakout happening as the market's either sitting still or going down, and the stock does have some normal beta arrangement with the market itself, it'll allow you to dial in and really, really find some choice picks. So I'm looking forward to getting that to you guys who have this, the current scanner. And we're also putting that into the HTML5 version that I showed you. All right. Enough about things to come. Let's look at a couple other stocks here. UTX, I got an email about this one. I got to hit it. So talking about longs on this one, I think, this one you've just got to kind of wait and see now. We could easily see 105.38 in UTX. I don't know if it's something to be messing with right now. Lockheed Martin. So, this is one I obviously haven't been participating lately. I got an email on this one. Again, I think you gotta stay away from something like this right now. It's not on sale. General Dynamics. This is one I really like, actually. So we're coming down into some support here again, 172.39. You got a chance to play defense on General Dynamics on the long side. And let's go in here and look at another situation, breakdowns. Quite a few breakdowns here, and we're going to clear this up when the market opens here on these cells that are showing that. Quite a few stocks that are actually still breaking down by definition. We're going to talk about a couple of these when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. So showing the XLF right now. This thing's just been a horse, but you've got some stocks that just haven't been cooperating. Some of the stocks in here, some of the financial stocks. I want to take a look at those in the scanner when you get a chance. And we're clearing up these colors. There's some faded situations here that we're cleaning up. So just to recap, S&Ps, let's take a look at those. We're up about 15 right now this morning. We're going to have to wait and see. Going back to the scanner, this is the S&P breadth situations. These are going to kind of settle out when some of the stocks open. But, you know, if these breadth numbers stay negative as the market opens here, you know, that's not exactly great when it comes to, you know, just getting on your horse and getting long the S&Ps here. I don't see any edge whatsoever really trading this in the middle of a daily profile like we're looking at right now. You know, it's just, you know, this is the fair auction. We could swim around here. That 2236 is a pretty good floor on this, but there's really nothing to hang on to when it comes to trading the S&Ps. You do have a 240 profile here, and this 2252 is a number to keep in mind this morning, along with 2245 down below. But again, you know, we're kind of possibly going to swim around here. Let's take a look at General Electric. All right, so I think this is a real print, 3169. So this is one, we're going to have a new profile on the weekly appear here as soon as the market starts getting some, into 930. But I like this stock. It's sitting here at 3150. We bounced a little bit this morning, 3169. I like General Electric to pick that up, but we're going to see some new inflection points on the scanner on the weekly. And before we start stepping in, we might want to take a look at those. All right, so 10-year, we talked about this trade. This is one we talked about early, beginning of the show. Really like digging in here on the long side between 123.10 and 123.20, that general area. You can play defense below 123.10. We're going to take a look back at gold. Kind of a similar situation, and I like this from the long side. Consider what the dollar's doing. Stops below 1146 based on your appetite for risk. Don't let it get too far away from you. Oil. 5404's stops oriented below there. We could go higher on gold, especially considering what the dollar's doing. The VIX, we talked about that. I think that trade is still, looking relatively right, but again, 12 was the big number on that one. This is kind of a wait and see to see if we could explode it from that 12 even higher, but right now, kind of reached our interim targets on that. The dollar, just have been bullish on this for a long time, and I don't really see any reason to get off that particular concept. Here's your 240s. You got support at 103.09 on the dollar, but again, the pretty significant move this morning. That could be a pullback buy scenario, 103.09 on the dollar. And again, I'm going to pull up General Motors again. We got 2 seconds here. Guys, we'll be right back. Or excuse me, we're going to end the show now. I'm a little confused. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.